Well, thank you very much, both Rachel and Malcolm. I don't have much to say in response. I think Rachel has set us some difficult questions, which we will go away and work on for the next 15 years.
That would be quick.
Maybe 20. They're great points. They're quite difficult to deal with. I mean, the kind of setting, it's hard to know much about the kind of fairness of an equity with the corporation tax to put it in the existing tax system. I mean, I agree entirely that's what we should do. It's quite hard to do it, but we will go away and think some more. And actually, I think a very good point on kind of returns to entrepreneurial investment and thinking about that and really thinking much more about what's really economic rent and we're actually capturing that. I think that's a great point which we should need to think about. I don't think Malcolm needs to defend the Merley's review much. I think I think what we're doing within our group is in many ways model Merley's review, which is obviously a great contribution. It didn't say a great deal about international tax. That's true. The question of whether should we just give up and not have a corporation tax? I think that's a very real one actually. That's what I tried to say right at the beginning of the day. If you kind of sit down and say, okay, well, why do we have one? Or if the existing form or any other form, then it's actually quite hard to come up with good reasons. I think we've kind of gone ahead and kind of thought, well, if we're going to have one, what's the best way of doing it? But I think equally, one could say actually it's not really. There's no point. But I think that in a way that kind of brings me back to Rachel's point. Is okay, well, is it a useful contribution to progressivity in the tax system, for example? But that's something we know almost next to nothing about the answer to, I think. But those are all great comments. Thanks.
So, are there any questions from anyone or comments from the Mead Committee?
Ruben.
Ruben, yes.
So, a couple of questions. I mean, when I first heard this presented by Alan Auerbach, I thought you had solved the biggest problem that was addressed in the previous panel with Paul, which is the thin distributor problem, because you impose tax on imports, and I thought, then that's not a problem because the whole thing is tax in full. But now you come and tell me that's not in fact the case, because you allow a deduction for all the costs of the production in the previous country. So let's say, giving his example, Intel sells to HP in Singapore, and HP puts a component in the computer that it sells in the United States. You get a deduction in Singapore, and that's the thin distributor. But that's of course an actual business-to-business transaction with large corporations. But the concern was always, a really thin profit distributor put in a tax haven just in order to have it be the one that's selling into the high tax jurisdiction. And while I agree with what Paul said that problem can be resolved, I thought that you were getting away from it, and now you seem to be reintroducing it. So I wonder if you can talk about it. Relatedly, I wonder how this is crucial to your analysis of the incident. So I think it's really interesting to think about the consumption taxes ultimately falling on shareholders because it's paid for by the non-labor profit, but that's of course not usually how we think about consumption taxes. Usually we think about consumption taxes as falling on consumers, especially in the export context where it will be consumers in the importing country and the shareholders presumably are in the exporting country or some other place. And it seemed to me that the fundamental issue is the more you make it less like a VAT, the better it is from that perspective, but the worse your WTO problems will be. And the more you make it more like the VAT, the lesser your WTO problems will be, but the more, then the incidence issue arises. And I wonder, fundamentally, it seems to me that the question for a country like the UK is, since you already have a VAT, why have another VAT? For a country like the US, it may be different, because I really do think we need a VAT, and if this is the only way to get a VAT into the US, then go for it.
Should I answer?
Yes.
Yeah, I thought we had solved the thin distributor problem, but maybe I haven't understood the problem that you're addressing. I mean, the problem, for the proposal this morning was that, you have a profitable company which, instead of selling directly into the UK, kind of sells it into a distributor in the tax haven who then kind of shifts onto the UK, and the place of sale for that profitable company is a tax haven. For the VAT, it will just kind of route through. We would tax it as an import into the UK anyway, and so I think that does solve that problem. So I think the two proposals are very different in that respect. I think there may be something else, but that's my understanding. On the incidence, so yes, I think you're absolutely right. We've struggled with this, and we've debated this at length. There's the VAT versus destination-based tax, and whether it's a kind of part of a VAT system or not. And I think part of that really kind of one's attitude towards that kind of depends a bit on how you think about the WTO rules, and whether we think they're reasonable or not. But I think we do have that kind of trade-off when we're thinking about it, exactly as you said.
The lady up there.
Hello. I think maybe I will bring a little bit social sciences in this debate. I come a little bit more with a political economy background, so looking at economy not just as economists, but really in a broader sense. And I'm really feeling a bit surprised, really, that we have this question like why tax, and why we need to pay tax, and what is it for? Because I think it's really essentially a tax is a currency of the social contract between the state and the citizens, state and the companies as well. Companies are, just like individuals, as legal entities, and essentially they need environment, security, safety, educated workforce, public infrastructure, all these things. We can go on and on and on. Companies, just like individuals, they benefit from that. And I think it's not about just taxing for the sake of taxing companies. It's really paying for the benefits companies get from the infrastructure and all these things, what they get in a country where they also create this economic activity. I think if we question that, then we equally can question why we pay income tax. And if we question all of this, then what is the state of the role of the state, and what it provides. So I think really I feel like we are going into very anarchic kind of direction, really thinking about that there is no this contribution to be made. And the point, just last bit point on the production-based tax, again, looking at more from the international development perspective, I really I can't imagine if you use the example, let's say France and UK, but if it's, for example, UK and Zambia, I mean, what kind of perspective you give to Zambia in this scenario when production as such isn't taxed, whereas it also actually costs a lot of money and it's a lot of inputs are required. And also the question of what we really, in this whole value chain, in this what we really reward, the production or really the salesman. And salesmen wouldn't be able to make any money if there wouldn't be that product. So I think there's this really important aspect. Plus also we're in on a global scale, who is nowadays producing and who is consuming. And there's definitely as well built in by default disparity what we can create on a global scale.
Thank you.
Thank you.
Can we?
Do you want to?
Do you want several, or do you want to come back? That seems quite important.
Okay. Well, okay. Let me
important.
address both of those then. Companies are legal entities. As an economist, I want to look through the legal entity and see, who's paying the tax. What individuals are paying the tax. Is the company tax being paid by poor people or rich people? I'd like to know that. I don't want to stop at saying, well, this company is paying the tax. If we could stop there and say, why don't we make all tax paid by companies, and then, we'd all be much better off because it would just be paid by the companies. So it's a legal entity, but I don't think that's not enough for kind of saying that's we should stop there in thinking about tax. We have to look through that and say which people are actually worse off as a result of that. I take your point, and I said this morning. I mean, a company operating in a particular country, whether it's UK or Zambia, may well be using publicly provided goods and services by the government, and arguably it should pay a contribution towards those costs. I think, and you could call that a tax, you could call that a user fee. I think my point there would be, there's no need for the kind of paraphernalia that we currently have of the kind of OECD model of international taxation to do that. You can look at, by and large, what's the cost of providing this company with publicly provided goods and services? Let's just tax that. We could think of a much easier way of doing it, to collect some tax as a kind of user fee. In the kind of UK and Zambia thing, it's certainly, if you kind of look at an individual case of a kind of Zambian company producing and selling to the UK, it would look like that's pretty unfair. I agree with you. Apart from you might have a user fee in Zambia, but there's kind of, there may be other production and sales going the other way. What really matters, that's what I was trying to address when I was thinking about the balance of trade here. The question is, what's happening in aggregate. So certainly at individual levels, it may look unfair, or either to the UK or to Zambia, depending on which way the trade is going. We need to look at the overall balance of trade to see actually who would be worse off. I think we also then need to take into account kind of natural resources in countries, to see, if we've got a tax on natural resources as well as a kind of general corporation tax, whether they'd be worse off. Certainly, it's not the intention of, this proposal to try and make kind of low-income countries worse off. That's certainly not what we're trying to achieve.
Right, there were some other hands up. I think we can take a couple more questions and then we'll have to wrap up. So, here? Yes, Alison.
Thanks. Just thinking about the tax competition effects. If the source country tax is a cost and an expense, doesn't that increase the competition amongst source countries? So it does have an effect on tax competition in that sense.
Sorry, could you explain that a bit more? I'm not sure I followed that. Sorry.
I was trying to keep it brief.
Okay, no, it's good to see you were. It's a trade-off.
So if, let's just go back to the example in the last one, UK, Zambia, or whatever your setup is. If the destination-based corporate tax doesn't have a credit for the foreign tax paid, but the foreign tax paid is a cost, which is an expense, I assume it's deductible. Maybe I'm not understanding your system. That's very possible that I'm not understanding your system.
It's the tax that you pay in the place of consumption is just a tax. You're not going to get a credit for that anywhere else.
So if there's no credit for source-based tax, then source countries are in competition vis-a-vis each other. That's just the same as they are in an exemption system or a territorial system where source countries' tax is a pure cost. And so source countries are in competition with each other to get investment capital where they're not getting a credit in the home country, residence-based country.
Well, okay. Well, I would say that the point about the source countries, there are expenses there, so you're actually getting tax relief in those countries. If it's a source country and a destination country, then those two things may net out. But if it's just if there's only production in one country and only sales in another country, then the production country is going to have a negative tax base. And I'm advocating that actually you should get relief for that negative tax base. This may not be, I didn't seem to be what you were saying, but I may have not have quite understood.
Sorry, I wonder if the confusion between the source of profit and the source of cash flows here. I've come across that sometimes with teaching students. We are talking about the source of a cash flow, not of a profit, aren't you?
Okay, now I am confused.
He needs to take your class.
I think maybe this should be left for the next session or for tea time. It sounds, and we are coming up with any other burning questions. Otherwise, I think they can come up in the next session because it will be a panel discussion, and I'm sure these issues will be raised again. But thank you, all three of you, for a great discussion.